buyer demand kind of being sidelined with the higher interest rates. I see this so friggin' clear in my business that I'll continue to process pre-approvals. I'll continue to have conversations, and these people are locked and ready from an application standpoint, just not pulling the trigger. And so if we continue to kind of build that inventory of buyers that aren't quite ready, 6 months, 9 months, and then rate trajectory comes down, they all come back.
Alrighty, folks, as you know, I am starting to believe that we are going to have rates higher for longer. I know a lot of people were calling for 5.5% mortgage rates in 2025. I thought that was always ridiculous. I am now starting to believe that we may see a 7 handle much, if not most of the year. But let's step back for a minute. Let's ask what would happen to the real estate and housing market if we had 7% mortgage rates. Again, we're just going to make a what if scenario. We're going to talk about first-time home buyers. We're going to talk about builders. We're going to talk about sellers. And of course, we're going to have this conversation with Matt, the mortgage guy. How you doing, buddy?
I'm doing good, Mike. How you doing?
I'm doing well, man. Unfortunately, the refi boom, the short-lived 3-week refi boom is over. I think that's official now. But let's talk about purchases, because I think purchases and sales might be a different story. We still have demand. We still have, the election, the end of year nonsense. But let's talk 7% mortgage rates next year. What do you think?
Yeah, I mean, first off, I don't know if it's my cloudy, optimistic brain, right? I don't know if I necessarily agree that we can stay that high that long, but nobody knows. What I do know is how buyers are acting, will act, how they kind of view this current state of the market, which, for some is scary. For others, it screams opportunity. One thing I'm noticing now, it's interesting. Rates go down. People are super optimistic. It's like Matt Ishbia from UWM shared a graph today, and it was hilarious because he graphed over the last couple years 5 different points of rates, and where, from our perspective, 6.125 was this cost. And the buyer psychology, if you know it, makes sense, where you could have the same rate a year apart, and their imports showed it. Their imports were almost double at a 20 basis points worse in price in 23, just because of the trajectory of rates.
Yeah, and folks don't know what he's talking about there. In 2023, rates hit our cycle peak of over 8%. So at 8%, falling to 7, net good.
Right. And that might have been like May of 24, actually, now I'm thinking about it. And then, in July, we were at 7. And then from July to mid-September, we came down to almost 6. And now with that spike back up to 7, the imports in October are so much lower when the pricing is the same as it was in May. But
this is consumer psychology 101. Again, I've studied the consumer for 30 years. It's really, really simple. And I'll admit, kind of funny. When 7% feels good? When they're used to 8. When 7% feels bad? When they're used to 6.
Exactly.
That simple.
So we haven't necessarily had it stay at a specific number for any period of time, but in your base case of 7% most of 2025, I think what it's going to do is some borrowers get used to it. They'll say, you know what, I'm not going to wait for a 5.5% interest rate. I'm going to buy at this current rate and figure out what that means for me and my purchasing power and the numbers. But it certainly keeps, a lid on demand. And so the market feels really soft. It feels relatively cold. Right now in Q4, some people are blaming it on election. Some people are blaming it on the fact that it's Q4 and seasonally, like it's not a busy time. But I think that slowdown in buyers and activity probably lasts as long as the high rates last.
I agree with that 100%. And I actually think D.R. Horton, CEO, said it best in their earnings. I think it was their earnings call, not their earnings release, earnings call. He basically said that buyers are pulling back. again, their numbers were horrible. Missed on revenue, missed on earnings, miss. And he's basically saying buyers are pulling back, not because of the election, but because they have been taught, they have been told that rates will be lower next year, right? Think about what the Fed did. The Fed cut 50 basis points. The Fed is on a rate cutting cycle. The average American doesn't understand that the Fed doesn't control mortgage rates. So they're just thinking that rates are going to be lower next year. So what's going to happen is you're going to see this compression in demand. And then the longer this goes, the less of a drop it will take to unlock it. So I think that's where we are, right? If we go into the year at 7% Q1, 7% Q2, we go to 6.5% in Q3, watch out. I mean, that's again the consumer, right? When does 6.5 feel good? When I'm used to 7. The other thing that D.R. Horton CEO said that I think is important for you is buyers are buying smaller homes. So where before maybe they were buying single family homes, now they're buying townhouses and condos. Again, affordability sucks. Affordability doesn't get better at 7, but sometimes you just have to buy, and buyers are going smaller. So it wouldn't shock me if condos and townhouses start performing better. At least that's what D.R. Horton says.
Yeah. And the conversations I'm having with buyers are, those that have a need or really just understand the longer I own real estate, the better off I am. So I'm looking to buy now, and they're in a position where they can do it financially. They're backing off of their max qualifying amount, right? Like, sure, I qualify for 800,000 with 10% down, but what can I get for 550 to 600? And those are great conversations to have. I enjoy those conversations because I know I'm setting somebody up with a situation that's going to be good. Best case, you know what? You continue to earn more, rates come down. You might want to upsize, and now you've got 3 years of debt pay down and equity in this home where you can sell it. No capital gains, on a $250,000 for an individual. And so, time in the game matters for those folks, but they don't want to do the opposite. Buy a big house that they got to downsize from because they're at the very tip top of their budget, and any little thing can knock them out. And so a lot of that, and a lot of concessions being made on the buyer side. But before I forget, to your point, you talk about like buyer demand kind of being sidelined with the higher interest rates. I see this so friggin' clear in my business that I'll continue to process pre-approvals. I'll continue to have conversations, and these people are locked and ready from an application standpoint, just not pulling the trigger. And so if we continue to kind of build that inventory of buyers that aren't quite ready, 6 months, 9 months, and then rate trajectory comes down, they all come back. And so that's why anybody who thinks for a split second that rates can come down and buyer demand won't spike, you're out of your mind, right? And so clearly, if you tell yourself 5.5%, 5.75, that's my strike price, that's when I buy a house. Guess what? So are these other millions of people that have been sidelined, whether it's their own doing or they can't afford it. And so that market is going to be equally as tough and equally as frustrating, I think, for buyers. Right now, it's like, man, at 607%, this payment doesn't feel that comfortable. Well, if you fast forward 18 months and you can buy that house and it's a 5.5% rate, you're going to probably pay $675 for it. So that's going to be equally as comfortable, and you're going to be competing against 9 other people to get it. So, that always messes with like the price, of course, because it's a competition thing.
Yeah, there's no question. Let's flip over to sellers, right? One of the things that again, I think in any market, it's a seller's or buyer market. Today, I think we're clearly in a buyer's market. So when you get to the spring selling season, which we'll call it February because it's really different based on the different parts of the country. Let's call it February. Let's call it March 1st. It's going to be really interesting who decides to sell because, again, the housing market is broken. The housing market at 7% does not have a move-up buyer. So that means less listings. There is a very, very good chance that next year, 2025, is a cycle low for transactions, purchase transactions.
Yeah.
We might do 3.6, 3.7 million existing home sales if we have rates at 7%, because the must sell is a very small community. The want to sell, very big community. But you're not going from 3% to 7%. You're going to stay your ass put.
Right. Yeah. And that's why, not my business model, but I'd feel really, really good about being an entry-level home builder, right?
Yes.
You build homes at or near the median home price in just about any market. And you get to say, here's my price. I'm not budging from it, but here's 20,000 to get the rate down to 5.5.
That's the magic.
That business model, they're my direct competition kind of, but
oh yeah, they have their own. I mean, I'm sitting in a brand new construction home that I got 10% off the price. I got a 4.99% 30-year fixed rate mortgage. I was shopping for an existing home. I paid more for this home than I would have existing, but my payment is dramatically lower. When I bought this, rates were roughly 8%. I'm under 5. There's no way I buy this home at 8%. But under 5,
which
it's payment. It's always payment.
And that's a quick thing for sellers. If you're selling a house, I just talked to somebody in Southern California, a great past client, who said, I don't know when I'm going to do it, but I'm going to sell in Southern California, take that $1 million in equity. I'm going to go buy. I think he's buying in Maine. And he said, oh,
that's a change. That's a change from SoCal to Maine.
A little bit of a move. But cool story. Bought in 17 for
nice.
$1,050,000. It's worth about 1.8.
Oh,
and owes $850. So just gonna be able to buy something outright in Maine. The power of holding on to real estate, and you don't like the prices on the coasts, but you get a ton of appreciation. But asking about, hey, I'd heard from somebody, if I'm looking to sell, that they offer, a buy down to the buyers. And I said, depending on the market, and that's being advertised sometimes. I think it's a really good idea. If you're a seller or your listing agent working with the seller, the builder's model works. Offer clients a buy down, which helps them on the payment side. Because here's the thing. Someone buys that house at 1.8 and puts 20% down and gets a 7% mortgage. The payment is whatever it is. If they buy the house for 1.840 and get 40,000 in credit to buy the rate down, their payment would be
dramatically less.
Yeah. Same net price for the seller of 1.8. Their payment would probably be $1,000 less because
at least on that
borrowing that much money and being able to buy the rate down by 0.75% or even 0.5% is huge on that big of a loan. And that works at every price point, right? Like 515 with 15,000 in credit, a lot better structure for the buyer's monthly payment than 500 with no credit. And so I'm already seeing that, but
if you're a real estate agent, you're a seller. If we are truly in what I imagine might be the first real multi-quarter buyer's market out to at least the summer of 2025, if you are selling and you need to sell, I would strongly suggest putting in the first line of the description, seller will help buyer buy down rate. You're simply going to get more eyeballs. You may not get a great offer, but you're going to get more eyeballs. And at this time, you got to get eyeballs on your listing.
Right. You got to get eyeballs on your listing. And another thing, like there's a couple things that I see coming and they're already here. Buyers aren't certain about the future of rates. I always tell them I'm not going to be a predictor of them. Some are just like, I don't even want to think about it. I'm going to permanently buy it down to 6 1/8 because I don't want to think about it. Others, let's do a 1.0 buy down. Let's do a 2.1 buy down. It was cool. A deal we negotiated for an ORaaT buyer in Sacramento in contract at a great price. Agent who I connected him with, I said, it's a great agent who will fight for you. I promise. Buyer says, let's see if we can get $5,000 in credit based on the inspections. And the realtor says, let's not just ask for 5. Let's ask for 10. The worst they can say is no, ask for 10 and get it. Right. And then use that 10 and say 7,100 of this can be applied to a 2.1 buy down. And all of a sudden we've got a 4.99, 5.99, 6.99 versus just 7%. Right. Rates might be lower in 2 years, but so buy downs I think are coming back, whether it's permanent or temporary. Seller concessions are definitely there to be had. on just
Absolutely.
about, any listing. Another thing that I want to mention to sellers, I always think to myself, man, like I love real estate so much. It would be fun to be an agent. Just play one
Yeah.
for a year, because I see some of these creative agents that are doing smart stuff in this market. If your house isn't dialed in, buyers are like, you know what? I'm already signing up for a payment I don't know I'm super comfortable with. I don't want roof issues. I don't want to have to think about if the floors are going to be 6,000, 8,000, or 10,000 because the carpets are nasty. I've seen, partnerships had where, hey, I'll fix up your house. Here's your price. Anything above it, we're going to split however we split it, right? After you pay back this cost, because you're going to get a premium. Those are the things that are still selling quick, in my opinion.
No,
You buy the house, your payment, you're not worried about deferred maintenance.
no, absolutely correct. It's funny you bring that up. Omar the other day, again, one of my flippers down in Southern California, is actually identified that he's had to go the little bit extra. He gave us an example where before he might have not replaced the AC, but because the AC was, working but near end of life, he had to replace it, and that helped him sell the house. Because again, the buyer's stretched on payment doesn't want to stare at a potential $4,800, $5,000 AC replacement. So you're going to have to dial yourself in for sure.
Yeah, and it's funny too, because that just sparked my memory, Mike. I think it was 2 weeks ago we talked, and I said something's coming on in my neighborhood. 659. I think they're unrealistic. So eating my words, like I promised I would, I went and walked it. And to your point, like Omar did, they didn't have to resurface the pool. Most flippers don't, but they did. They didn't necessarily have to replace the AC, but they did. They completely dialed this house in. And so when I walk through it, I go, beautiful finishes. They did the little things, new fence, resurface the pool, 5 offers in the first 5 days. So eat my words, because that's what buyers in this market that really need to move want. They're like, you know what?
Exactly.
This may be a little bit tough at first to jump into a $4,800 payment, but if I don't have to worry about roof, AC, deferred maintenance stuff, I'm okay. Where people are really starting to back out of contract and be scared is, I'm already at the top of my budget, and a roof is $20,000, and this might go out in the next 3 to 5 years. And how am I going to handle that? And so, eat my words. If it's dialed, it's selling fast.
It could
if
move.
It's not, you're writing sweet deals. And so, for the sellers with the stuff that ain't so pretty, be prepared to give concessions. And for the investors out there, be prepared to ask for them.
Yeah, go shopping. Again, I think at the end of the day, when we're buyers markets are all the same. Buyers markets reward people who do the work, who write multiple offers, who follow up. Again, nobody is meant to say yes to my first offer, but they might say yes the second, the third, the fourth, the fifth time I call. Because at the end of the day, some people must sell, some people want to sell. My job is to figure out who must sell and who wants to sell. Matt, if somebody want to reach out to you, get a pre-approval going, or just talk mortgage, how do they do that?
Quick and easy. Go to greatmortgagebroker.com, fill out that quick form. We'll be in touch. If you're in a state I'm licensed in, we'll get connected. If you're in another state, we'll connect you with a great LO from the team that's licensed there. If you want to send me a quick question, I don't mind, matt@mtmg.com. Follow me on Instagram, Matt the Mortgage Guy UM. Check out the YouTube channel. In those comments, I feel like I have, discussions and back and forths as well. So I'm not too hard to find, but, specifically getting yourself pre-approved and getting yourself dialed in, I recommend it for everybody, no matter how far out you are. That's greatmortgagebroker.com.
Thank you, buddy. Appreciate you.
Thanks, Mike.